Hello there, this is Tejas from Trendline, and in this video, we'll be looking at the stocks in the defense industry and the reasons for their sharp rise over the year and quarter. We'll also analyze if they can continue their momentum. The stocks in focus are Hindustan Aeronautics, Bharat Electronics, Data Patterns India, and Bharat Dynamics. All these companies' stock prices either hit their life high in the past week or are currently trading close to their life highs. These defense industry stocks outperformed the Nifty 50 by a huge margin in the past quarter and also on a 1 year basis. In the past quarter, all 10 defense company stocks advanced. Out of the 4 companies in focus, Data Pattern's share price rose over 40% in the past month and hit its life high on August 30th. If you look at the year change, with the Nifty 50 rising around 5%, the general industrial sector, which includes the defense industry, rose 49%. Of the top 4 companies in terms of market capitalization, Bharat Dynamics led the pack with its share price more than doubling over the past year. The main reason for the staggering rise of defense stocks in the past year is mainly due to the indigenization of the Indian defense sector. The central government's emphasis on the Atmanirbhar is clear in defense, and it has prioritized higher exports, lower imports, and Indian development. With this shift, the order books of the Indian defense industry grew at a very fast rate. According to a report by the India Brand Equity Foundation, India witnessed a 21% decline in defense imports during 2017 to 2021 versus 2012 to 2016. Arms exports, on the other hand, have risen 6 times since 2014 during FY21 to 22. In the FY23 budget, the government earmarked rupees 1.52 lakh crore for the capital outlay in defense. This amount, which has grown at a CAGR of 11% over FY20 to 23, will be used to maintain, upgrade, acquire, or repair capital assets. The portion of the capital outlay in the total defense budget is also rising every year. Currently, it is at 29% in FY23 against at 25% in FY20. However, in terms of defense budget as a percentage of GDP, the number has reduced over the past 10 years. If we dive deeper and look at the percentage of defense procurement budget to purchasing locally produced weapons and systems, we can see why the defense industry stocks have been on a sharp rise. In FY23, 68% of the total outlay was earmarked for purchasing domestically produced weapons and systems to reduce the reliance on imports, and this metric has been rising since FY20. With all these factors at play, the defense industry company's order book grew astronomically and the stocks became lucrative for investors. As per government estimates, rupees 5 lakh crore worth of contracts will be placed for defense platforms, equipments, and components in the next 5 years. The domestic industry is expected to get orders worth rupees 3.5 lakh crore during the period, considering the 68% indigenization content target. However, with all these positive developments, there are some red flags for the industry. The client concentration is extremely high as the government of India remains the major client. Even though the defense companies currently boast of huge order books in the next 3 to 4 years, execution will always remain key. Any delay in manufacturing or any holdup in approvals and payments from the government side may greatly hurt the top and bottom lines of the companies. Let's now look at the top 4 companies in terms of market capitalization in the defense industry, starting with the heavyweight Hindustan Aeronautics. This is the largest defense public sector undertaking in India. Hindustan Aeronautics is involved end to end in the defense production chain for a wide range of products, including aircraft, helicopters, aero engines, avionics, and accessories. Some of the products include Tejas LCA, Su-30 MKI, Dhruv HLA. This company's stock price is up 64% in the past year and 13% in the past month. Strong Q1 FY23 results helped HAL share price to rise in the past month. Its revenue rose over 2.2 times year on year in Q1, outperforming both its sector and industry average revenue growth. Strong revenue growth in the maintenance, repair and overhaul or MRO segment drove the top line higher. In FY22 revenue from this segment contributed over 64% of the total revenue. In fact, revenue contribution from the MRO segment has been rising since FY19 and is expected to reach 73% in FY24 according to a report by ICICI Direct. However, one notable point is that the manufacturing segment has the highest order book value. It consists of about 75% of the total order book. This is because there are major orders both in the pipeline and expected over the next year, including 12 light utility helicopters, rupees 33,000 crore worth of contracts for engines, which require a lot of time to fulfill these orders. One area that HAL plans to focus on is exports, which currently contribute less than 1% of the total revenue. However, management expects this number to rise in the coming years. Recent news indicates that India is the frontrunner for an export order from Malaysia for 18 light combat aircraft, given its low acquisition cost and high technical ratings. In addition, on August 28th, Argentina also expressed interest in the indigenous LCA Tejas, manufactured by HAL. With all these export opportunities, this company's stock price hit its lifetime high on August 18th. The second company in focus is Bharat Electronics, or BEL, which is a leading aerospace and defense electronics company. It primarily manufactures advanced electronic products. Bharat Electronics stock price has been hitting its life high very frequently in the past month, and lately it hit its life high on September 1. The sharp rise in share price came after the company announced its Q1 FY23 results, where the management said that the FY23 pipeline remains healthy and expects orders such as Akash missile system and radars worth rupees 20,000 crore. The order book position of the company stood at rupees 55,333 crore in Q1 FY23 with an order inflow of rupees 870 crore. In FY23, the order book is expected to rise to 59,754 crore rupees with order inflows worth rupees 20,000 crore. This company is focusing on diversifying into non-defense verticals such as electronic vehicles, metros, healthcare, homeland securities, etc. The management plans to increase the non-defense revenue share to 20% over the next 2 to 3 years. According to Trendline's forecaster estimates, this company's revenue is expected to rise 14% in FY23. The management also guided a 15% revenue growth and an EBITDA margin guidance of 21% to 23% for FY23. Let's take a look at the third company in focus, Data Patterns India. It is a vertically integrated defense and aerospace electronic solutions provider. This company's stock, which was listed on exchanges in December 2021, hit its lifetime high for 4 consecutive trading sessions starting August 26th and is up over 40% in the past month. However, when the company announced its Q1 FY23 results on August 2nd, its share price fell over 5%. This was due to a steep fall in gross margin, which contracted to 64.7% in Q1 FY23 against 90.2% in Q1 FY22. This was because of changes in contracts and revenue mix. This change remains a key factor not only for this company but also for all defense companies that rely significantly on one main client, the Ministry of Defense. But the company maintains a positive outlook as it guided a revenue growth of 25 to 30% with around 40% EBITDA margin. Like all other defense companies, the order book value of Data Patterns remains high at rupees 663.5 crore as of August 2022. Orders from the production segment constitute about 61% of the total order book. Order inflow during Q1 FY23 was at rupees 45.6 crore. In terms of the segmental revenue mix, Data Patterns derived about 46% of its Q1 FY23 revenue from the production segment. And regarding the client concentration, 40% of total revenue came from Ministry of Defense and 25% from HAL, 7% from BrahMos and 16% from exports in Q1. The management expects rupees 2,000 to 3,000 crore worth of orders in the pipeline for the next 3 to 4 years. Radars, electronic systems and avionics are expected to be major drivers for order books and revenues in the next couple of years. The final company in the top defense stock list is Bharat Dynamics. This company is one of the leading defense PSUs in India engaged in the manufacture of surface-to-air missiles or SAMs, anti-tank guided missiles, air-to-air missiles, among others. Like other defense companies, the strongest point of Bharat Dynamics is also its order book, which is at rupees 13,000 crore, giving strong revenue visibility. In addition, rupees 22,800 crore rupees worth of orders are in the pipeline for the next 2 to 3 years. The majority of this is expected to come from the Indian Army and Indian Air Force. This company also has a huge opportunity in the export segment from friendly countries for its missiles. On the back of strong revenue visibility, Trendline's forecaster estimates show a revenue growth of 29.3% in FY23. Its net income is also expected to rise by 30%. To fulfill the rising order backlog, Bharat Dynamics is in the process of setting up two additional manufacturing facilities in Hyderabad and Maharashtra. And this will be used to manufacture surface to air missiles and very short range air defense missiles, respectively. Investors and analysts are very bullish on defense industry companies, mainly on the back of indigenization of the Indian defense sector. With these companies sitting on huge order books, the focus now turns to execution. How well these companies fulfill the orders. Keep in mind that a significant part of the orders for all these defense players is from a single client, the Ministry of Defense. So any holdup from the government side can also affect the order fulfillment timeline and the profitability of these companies. So in this video, we looked into the rise of India's top 4 defense industry stocks and key risks for the companies going forward. You can find more information about these companies and other listed companies on trendlyne.com. This is Tejas signing off.